Hello and welcome to Pro Trader Strategies Market Commentary for Friday, March the 6th. It is Unenjoyment Friday. Well, it's not just because most markets are down. We used to call it Unenjoyment Friday because it's the first Friday of the month. That's when we get the unemployment data. So therefore we called it Unenjoyment because it could very well be crazy on those types of economic data points. It really is one of the most important economic data points that we will get to help us with our forward-looking guidances on these different underlyings. Well, not so much anymore with coronavirus being in mainstream media and really what is driving the overall markets these days. But without having to know what is going on, we wouldn't be able to really come up with assumptions. So I want to talk about the unemployment number anyway here in the United States. We got average hourly earnings coming in line with expectations. Now the non-farm payroll number, employment change, 273,000 hires. It was expected to be 175,000 hires. So almost 100,000 hires, more than what was expected. Last month's number was revised up dramatically from basically 225 to 273. So another 50,000 there over what we had currently reported. So a huge number here for non-farm payrolls. Unemployment rate dropped, downtick to 3.5%. Now, let's talk about those economic data points. One thing is, those are hindsight, right? We've already seen that happen. That was before we started seeing all this coronavirus and this impact on travel and leisure, okay? So a lot of this economic data point came out and it was due to decent travel and leisure hires in hotels, in transportation type companies. So that might really be a backlash where those people start getting laid off. I mean, even the U.S. government is talking about stopping some of these cruise lines, or at least incentivize or trying to get people to not take a cruise right now. So that is crushing those travel and entertainment, the cruise line like Carnival. It's probably going to hurt Disney a little bit as people are really pulling back. Even right now at airports, they are virtual wastelands, despite the fact that we are literally heading in to spring break season, right? This is where a lot of people will be planning on traveling. So with that out of the way, we also got the results from the OPEC meeting. Remember, we talked about OPEC and them trying to get Russia to cut back on some of their production. Russia basically walked away from the table. There is no sign of future meetings or anything like that. Russia's out. They are going to keep production where it's at. Therefore, that is why we're really seeing this real slide down here in crude oil. That whole mid-50s is out of the picture as far as I'm concerned. That was based on the economy doing rather well. I've heard some people even talking about, with the already inventories at elevated level, especially for gasoline, the crimp on travel in and around the spring break holiday season, which should cause some of those inventories to come off. Well, that is going to actually create more and more surplus as people are not traveling like they were expecting to. People are canceling tickets like it is going out of style. So therefore, crude oil really weak. I don't know where it's going to go, but it's not going to go back up to the 50s anytime soon, you guys, until we start seeing some of this fear in and around the coronavirus being lifted. And, you know, a lot of this is generated, in my eyes, I'm still under the belief that the coronavirus is just a little bit overdone in the media. They're talking way too much about it. Every time there's a coronavirus victim or somebody comes down with the flu that is correlated to coronavirus, it is all up in arms, right? Well, you guys, the flu is, influenza is a bigger problem really than the coronavirus at this point. Yes, some people say it has a longer gestation period, so people can be walking around with coronavirus and spreading it. The bottom line is you need to be very conscious of washing your hands, making sure you're not shaking hands and stuff like that, because that person actually could have the coronavirus. So I think it's called, what is it, asymmetric carriers or something like that. So we do have to worry about that, but the way to avoid that is to really be on our game and asymptomatic. That's what it is, asymptomatic. So make sure you're just staying clean and, trying to be very conscious of that. Anyway, without further ado, we've already talked about crude oil a little bit. It is really coming off quite a bit, down $3 on the day. You can see here it broke into the 41 handle. It hasn't tested that 30 handle yet, but like I said, we're going to start seeing how this starts shaking out with the spring break season. The fear, I always talk about fear in the markets, and fear is usually overstated. I think the fear is overstated here with the coronavirus as well. Opportunity abound, to be quite honest, especially if you are a long-term investor. This is the time I would be adding to my portfolio, which I already am, with most of my portfolio looking to be, with a lot of my short puts being very close to the strikes at this point. All right, so crude oil coming off. Gold did make a big spike today. I am still in my short GLD, and that GLD is being tested right now. I'm right at my 157 short calls. So those are in the money by a couple of pennies. I'm going to hold on to it because I think, like I said, we got a tweezer top going on here, especially if this were to end up today. We might get a little bit of a correction. I have on the very short duration, so 14 days I've got is my gestation period on most of my position. So I think that, the last 7 days we talk about in the webinar, we show that chart of the theta decay. That is really going to be ramping up quite a bit. And with volatility, if we can get a little bit of volatility coming out, that would be a nice move there. Now, bonds are below 1%. As a matter of fact, one of the prints I saw was when we were trading, it was not too long ago, was 1.27%. I think it got down to as low as around 1.10. So extremely low. Extremely low interest rates. I've talked about this. If you haven't refinanced, it is probably a really good time. They can't go much lower than that, and much lower than this. Even if it were to go down maybe 50 basis points or something like that, you would still see about the same interest rate at the bank. And sorry, was that the 10-year note? Sorry, I wanted to see the 10-year notes. So this is the 10-year note. Sorry, 10-year notes. As low as just below 0.6%, 0.6%. Yes, there is no handle on the front of that. That is like Fed Fund Futures low, right? Fed Fund Futures are at 75. We are at 0.6 something in the 10-year, which is this chart right here. So that 138 all-time historical low, they are still lower than Fed Fund Futures. Bonds, this is the bonds trade we were talking about, and last I saw, which was not too long ago, was 127 or 1.27. VIX spiked up into the 50s. That was on the morning move. We had a big sell-off. We have regained some of that. I don't know if it's capitulation yet, but we can take a look at the Dow Jones here. You can see it's higher than where we opened. It is still down by about 500 points, 778. Trying to make a rally here, as I think people are looking for value, especially in the Dow Jones. Those are the blue chip stocks. There is a lot of things out there that especially in my portfolio. I'm looking at my portfolio and feeling like it is relatively immune to this virus. Yes, the market's selling off because people are selling everything. It doesn't matter what is out there in their portfolio. They're dumping it without thinking, and that has a tendency to be correlated to a type of capitulation point. You know, if you're selling Facebook because you're worried about coronavirus, that doesn't make sense to me. Yes, maybe companies might pull back on a little bit of their ad spending, but there's going to be other companies that step up and start taking advantage of that. So like Facebook being off by $5 today, and that seems weird. If you are in quarantine, you're going to be doing Facebook, right? Things like Coca-Cola, I think that those are products that people are going to be stocking up on, especially right now. You know, MasterCard, people are still going to be spending. Yeah, maybe that they'll pull back on a little when they're not traveling as much. They're not going to be ramping that up as much. And lower interest rates kind of hurt their overhead, but they print money. Microsoft is in my portfolio. Microsoft, supply chain issues, yes, but that's not as much of an issue as what something like Nike or Apple is going to experience, which I don't have in my portfolio. Starbucks, I think people going out may pull back a little bit on Starbucks, but who goes without their coffee? Not me. As a matter of fact, I'm drinking coffee all day long. So it's not Starbucks, but I have a really good, if you have a Kroger or a Safeway, I have a really good coffee that part of their signature series that is absolutely out of this world. So it's my favorite. Anyway, we've got Dow Jones off 500 points now. You know, we were talking about that already. 233 points off in the NASDAQ. It is starting to look like we're kind of accelerating a little bit down to the downside as some of the institutional buying has ebbed a little bit. This is probably where you're seeing your retailers come in, and towards the end of the day, you'll see that again as those retailers have usually orders at the end of the day. And E-mini S&Ps off by 70 points as we speak. And here we take a look at the E-mini S&Ps. We got the jobs data that made it rally. People are starting to think, you know what, that is hindsight. Despite the fact that it is a knock it out of the park number, you would expect the Dow Jones to be up on any given day before this coronavirus and these 1,000-point swings. Normally, we'd probably see the Dow Jones up 300-400 points, making all-time highs with those types of numbers. But coronavirus is fear, and people are really, that is probably our best forward-looking type of thing, because if people are fearful, it really could create this slowdown in the economy. So I haven't done anything with my portfolio. I'm kind of sitting on my hands here waiting for everything to shake out, and I'm going to ride it out. If I get hit, if I have to take Microsoft into my portfolio for the long term, I'm going to be starting to sell calls against it, which I may be looking to do very soon, heading into that last 14 days. But theta decay, volatility coming out just a little bit will help me out. Volatility expansion, obviously not when I am selling puts. So I'm going to be looking at doing a kind of an emergency break-in on our courses here, you guys. We have been doing implementation of options into our portfolio, but we are talking about how we can actually hedge against this type of pandemic, if you will. What stocks are we going to be looking at for moving forward? We're not going to be looking at people that are really subject to supply chain issues and things of that nature. I'll be digging into that going forward here. I'm going to look at doing this week coming up to try and create something for you that is pertinent for right now. So stay tuned for that. Check it out at protraderstrategies.com. That's all I got for you guys. We got to do one more thing though here with our disclaimer. Keep in mind, everything I talk about in this webinar or in this daily market commentary or in the webinars is educational. We are trying to educate you guys in order to implement these strategies. Nothing is a recommendation or a solicitation for buy-sell setups. I'm just telling you what I'm doing, what I see in the overall markets. So keep in mind that you can lose money while trading. Obviously, in the last couple of days, people are losing money if they are long. You know, the people that were short are making money. So keep in mind, pause this, read over it, and make sure you understand the implications of trading. All right, so Remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, take that.